Good night. Welcome back to another schema scalper video. In today's video, we're going to be looking at how to trade off the high or the low of the day. So getting into it, before you even start the video, if you're new here, this is the ideas that we're going to be using. So it's power of 3, and then I'll just say in brackets what it means. Buy above open, sell below open. Haha, I'll trick you guys. Buy below open, sell above open. Boom. Okay, that's the first one. Okay, next one is, let me actually use the same text bar. Okay, that is the first one. Let's see if it's here, the next one. The next one is range expansions. That's not how you spell expansion. I literally can't spell. Expansion. I think that's right. Okay, it's central bank Tiro's range, Asian range, or flout. One of those three. It's that simple. And now, okay, I left the space in there. Let's delete that space. Then you're going to be looking at swing points. Swing points, then fair value gaps. This is all you need to know. So here you've already got your direction. Here you've got your point of interest. Here you dial in your point of interest, and here you've got your entry. Sounds simple enough, and it's literally that simple. This is just for holding daily ranges. Okay, I'm not talking about holding from Monday till Thursday or holding from Tuesday till Thursday. That's just daily ranges. So London session to New York session, or London session to New York close, and then also you'll probably need before you even need power 3, you'll need to know sessions. So all of this is actually on my channel already. Sessions. So it's London slash New York slash London close. Okay, that's it. Session, power of 3, range expansion, swing points, fair value gaps, entry, target, or stop. That's all we do every day, over and over and over, until it becomes boring. When it's boring, you know you're doing something right. Okay, so we're gonna use this. Let's actually make it a bit smaller. No, not that small. That's fine. And now we're going to be looking at specifics. Currently on a 5-minute chart. I'll go back to the 15. I'm gonna go to a random time in price. Let's do this day. What is this day? Tuesday, 23rd of January. Okay, let's do this day. Midnight. Oh, that's Monday. Okay, let's go. I'm gonna move over to a 15-minute chart in 1 second. I just want to mark out midnight. I literally can't get it to the sensitivity of the mouse. Okay, there we go. It's midnight. And let's mark end of the day as well while we at it. Okay, that's end of the day. So in this, we're gonna be looking at our sessions. Let's move over to 15-minute chart. Come on, come on, come on. Okay, gonna be looking at our sessions. So 2 o'clock. Boom, that's 2 o'clock till 5 o'clock. Boom, that's area of trading. Then we're going to be looking at 7 o'clock till 9 o'clock. It's all New York time and it's all AM. 7 AM to 9 AM. That's 10. Okay, let's go back a bit. Now what you're gonna see when you drop down to the 5-minute chart, that last candle encapsulates the 9 AM until 9:15. Or until 9:14, the close of the 9:14 candle. So when we're on the 5 minutes, we're just gonna adjust those times a bit just to refine it. And then we are looking at London close. I actually just chose a perfect day. I don't know how I did it. Let's do that. 8 until noon. Noon meaning 12 PM. Middle of the day, okay? And we're ignoring everything that happens after this because we would like to be out of the trade by this time, or having our stop at break even and holding for target on the next day if we are buying down here. So now we've got our sessions in power 3, so we're going to mark the open, and at the time of trading this is all you're going to have, so we'll keep that on as all we have. Red candle, the high of the body, bring it across, boom. Range expansions, central bank dealers range, Asian range, or flout. Now we need to choose between the three. Do, 1600, 1600, okay. Now we can see, let's actually separate this first again. Asian range, trending, moved off of this fair value gap, and took out the highs, trending. Central bank dealers range, not really trending, no, not trending at all, consolidating. There is a fair value gap down inside here, but it still closes up, and I feel like that one's just consolidating. That one just feels right to me. So we're gonna be using not this range, because this to me is clearly trending. So this is what I'll mark as Asian range. I would ignore that one. That one's clearly trending to me. Central bank dealers range, I'll use this, and I'll use flout. Flout means this whole range, both of them. So lowest low to highest high. That's why we need to know swing points, so you can do this quickly. You don't have to think about it. Okay, let's see how low that low is compared to this one. Okay, this one is lower. Boom. Lowest low, highest high in terms of swing points. Okay, now I already put my cursor to where my eye was drawn. Obviously, eye is going to be drawn to the high of the day, right there. Made in London. Now we're going to do the same thing with flout range, lowest low to the highest high, which I think is up here. It's this one, no, this one. That's the one. And now we are using settings, presets, float. These are just half levels. See how that it's almost the same. So either or in this situation, you could be looking at either or. Okay, now is where the magic happens. Okay, boom, we're drawing this out into the landing session. So you've got sessions, power 3, range expansion. We already chose which one. We're going to use central bank dealers range and flout. I would rather use central bank dealers range, but yeah, let's use central bank dealers range. It just seems like the right one. Obviously in hindsight it's easy to say, but that's why we needed to know swing points and now fair value gaps. Now we get into the juicy part. Swing points is for this, and then for inside of here. I'll go into a 5-minute chart and I'll explain to you why I'm saying inside of here. Where's this price? Where's price? Oh, it's a lot. What is the date? January 20 somethings? No, call me 29th. Yeah, there we go. 24th, 23rd. And I just went into a random area so you guys know that this is not cherry picked. So you're waiting for it to hit the level, so like the 3 or the 2 or the 1, and selling from that level. So you want to preferably have it hit the level from below during London session. So moving up into the level, like what happens here. I think that's, yeah. So if I go into a minute chart, I'm not going to do that now. If I go into a minute chart, the price would be going down first, and then as London, this 2 o'clock candle hits, it will be going up because of this long week. Well, that's what I'm expecting, what I'm anticipating price to do during that time, right? And then when it hits this level, you do not enter off the level. That is the golden rule. Do not enter off the level, because sometimes we will have multiple levels in one session and you're going to say, hey, ski mask, this doesn't work. No, it works. You just didn't wait for the confirmation. And this is literally a confirmation. 5-minute chart, you're going to be looking for when it hits the level, right? You're going to wait for a swing point to form, like what happens here. Move down. And you see there's 2 swing points. One is higher than the other one. Now usually, I would ignore this level now, this 3 level, if it happens. This -3 projection, I would ignore this level if both of those swing points were inside the London time zone, the London session. So if this candle was moved 2 candles to the right, this one has moved 2 candles to the right, I would ignore this, because then it's making a higher high after it's hitting that level. And I'm not going to say I never want to see that, but for the way I'm trading this, I don't want to see that. And now we are marking fair value gaps, right? The first fair value gap you see on a 5-minute chart. So it's that tiny one inside there. See that? I can't zoom in any further. Just sit closer to your screen. That one over there. So let's do it with this. Command using the wrong keys. That's your first fair value gap, right? Now if you missed this and you saw this as the obvious fair value gap, you look at that as the fair value gap. That's fine. There are times when it's not fine and times when it's fine, and yeah, you'd know in hindsight. But typically you would want the first fair value gap that's made. Gosh, using the wrong keys. So it's right here, this one. You'd want to enter off that one. Just wait for it. And now you need to blend price again. Wait for it to hit that fair value gap. So you're blending the price, which is this price action pattern, and time. You wait for it to hit this during one of these sessions. So it might not have hit in this session. Then you just go look forward and you'd wait for New York session to hit that 5 minutes fair value gap. And guys, it's literally that simple. It's actually that simple. It's crazy how simple it is. But this, and you're waiting for a full, how can I say, full close on the fair value gap. Sometimes you don't get it and you just literally miss the position for that time, but that's fine. So like for instance, if this is the fair value gap you're looking at, you see that falls there, stop. So this you're expecting to be high of the day. Since it hit that projection level and move down, so you're gonna put it 3 points above that high. 3 pips, sorry, points. I'm doing CFD, so it's, to me, I'm looking at points. 42, so that's 4.2 pips. So 7.2 pips, that's your stop. $7.2. And if you have any spread or whatever, just add that in as well. And now your target, first and foremost, since we're trading a daily range, we'll go back to what we said over here. Sessions, power of 3, range expansions. These are just patterns of entry in price, or patterns that price is printing. So during our sessions, we need to understand that London usually creates the high low of the day. New York is a continuation or reversal. And London close creates the other end of the range. So if London made the high, London close usually makes the low. Right, that's all explained in the video. So now, holding for targets, since we're doing a daily range, we're going to first of all never, ever, 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 this is the golden rule to having a good risk reward. Never, ever, ever, if you're buying above the high of the day, close above the high of the day. I'm sorry, if you're selling above the high of the day, don't ever close above the high of the day. If you're buying below the low of the day, or the low of the open of the day, you never, ever, ever close your position below this. So that's the rule. So you have to wait, and now it gets juicy because you're looking at these projections plus low of the day. So this will be your first target, and look how low that is. That'll be your first target. 48 pips. First target, right? And now you'll see, so this range, the initial range, I usually don't use that. I usually use the multiples after. So -1, -2, -3, -4, -5. And then here I'll use 2, 3, 4, 5, 6, and so onwards. So this initial range, I do not use this. This whole area here, 0 and 1, that's a measurement of the range. I do not use that 0 and 1 level. This is just based on my personal experience. So you see New York doesn't hit the first multiple, that 2. So I wouldn't close during New York. I would have alert set at these points at 2, 3, 4, 5, 6, 7, and based on the time the alert goes off, I would make a decision: am I going to close the trade, or am I going to try and hold for a larger profit? So for instance here, since it didn't hit that in New York, let me actually adjust that. See, it's on 9 o'clock. That's perfect. That one's on 5 o'clock. That's perfect. Okay, nice. So it didn't hit that level during New York, so I'm not closing the trade in New York. Simple as that. Now we're looking at London close. There's the next level. Let's just mark it out to the horizontal line. That's the next level. Early on in London close. And now you need to make a decision. When it goes up like this, is it creating fair value gaps up after it hits the level? No, right? It's not. So you move your stop above the highs, or I'm not saying how you should manage your position, but this is how I would do it. I would move my stop above the highs of New York and then hold till the end of day. So hold until I start seeing either a lack of movement down, like slow lethargic moves, and levels where those slow lethargic moves are happening. So these are 4 levels that we're looking at for take profits. Now this is already crazy. Like, what's that risk? 1 to 8. That's already insane. Now if we see, okay, fair value gap lower, now immediately our eye is drawn to the top of that fair value gap. If price trades above that, you want to be out of the trade. Simply because we're at the end of the day, we've already hit one, like it's already hit that level, it's went through it, and it hasn't created a swing low yet. So once it creates a swing low, like inside here, that's the 5 level, creates a swing low. If it's a fair value gap up, I'll close the trade. But we didn't make any fair value gaps up. It's a 6 level, really late, still holding. There's another fair value gap down that it could trade to, hits that, still holding, and then 12 o'clock hits at the level of 6 or 5 projections down. 1, 2, 3, 4, 5 projections down, and I will close it right there. So you basically get really close to the high of the day and really close to the low of the day. 1 to 12 hour trade. So if we already know price opens here, right? Our first projection down is this 2 level. So that's our first target. That's insane to think of it. Our first target is 6%, 6.5%, right? And having 6.5% as a first target is proper insane. We literally base it off catching the high of the day but not trading it, catching the high of the day but not trading it, waiting for confirmation, a retracement into the confirmation, and then a sell-off. That's the name of the game. And we can go through another example. I'm just gonna go forward one day. Oh no, I'll go to a random time again. I'm removing the horizontal lines. I'm not removing everything, guys. Just the horizontal raise, sorry, because it's gonna go all the way through price. It's gonna be a bit annoying. So let's say we took it off there, 6R, boom, 1.5% or what's it, 3.5% from passing your phase 1 FTMO challenge. And this is just literally Tuesday morning. Okay, the Monday, that was Christmas. No, Monday wasn't Christmas. Christmas was Thursday. Yeah, I'm looking at January. Guys, sorry. Long day at the office. So we marked midnight. Okay, I'll bring this line a bit back. Where's my shift button? Okay, there we go. 5:30. I'll leave the line there. Oh no, let's throw it back actually a bit further. Before 4. Yeah, 2. That's fine. Now we're going to mark out 15-minute chart. The exact same thing we're going to do over again. Gosh. Yeah, we are there. 15-minute chart sessions. Let's do sessions first. So from 2, I think that includes 5. Yeah, 2 till 5. Boom. Now we are doing 7 till 9. I think it's that high. No, it's not that high. Doesn't encapsulate the high. And now we are doing, so without price action on the chart, just use horizontal lines or boxes like this and have it way up high and way down low. Then you can adjust the range as it gets into those boxes. Try not to use indicators because you want to be as close to price as possible. Now you're gonna use 10 o'clock. So you want to draw all this out by hand. 10 o'clock until 12. Boom. I'm gonna mark the end of the day or the new day open. Okay. Now we're gonna mark open of the day, down candle, so the high of that. Right, extend it all the way through. We've done our sessions. Okay, next, power of 3. Boom, we've marked the day open, so we've done power of 3. Range expansions. Now that's 14. No, not 14. 1600. 2000. Now we're gonna see, is it trending low? Looks like it's trending up again. Looks like this one is trending up again as well. So I'm going to using flout. So it's both of these ranges combined. Okay, so we see there, it doesn't need it perfect. Next one, it doesn't need at all, right? So let's go into a 5-minute chart. We've drawn our flout. That's the thing I think would work best. Maybe the Asian range or central bank dealers range would be better, but the way I'm looking at it now, I just want to be using flout. Okay. Now I'll show you these points. Okay, I wouldn't be using flout. And I wouldn't be trading London session. So it hits. I'll show you now. This is why I wait for confirmations. Hits 0.5. No fair value gap down. Hits 1. No fair value gap down. This is all on the 5-minute chart, guys. Hits 1.5. No fair value gap. Hits 2. No fair value gap. Hits 2.5. No fair value gap down. Hits 3. Doesn't hit 3 at all. Okay. So immediately the idea of selling here, the idea of selling is still valid. But the point of entry, we don't have one because we don't have a fair value gap in this time, right? Fair value gap down. Now we're going to use all those same levels projected across again. And now we're going to create some rules during New York. Okay. Since price has already gone through here, right? And we are trying to sell. We want swing highs to form at these points. So if a swing high doesn't form here, we ignore the level. So if it forms a swing high and it goes higher and forms another swing high higher than this level, we ignore it. Like this one, no swing high, no swing high, no swing high. Here creates a swing high, no fair value gap, ignore New York. So now we can extend these ranges again through London close. So here it creates a swing point, no fair value gap, swing high that's higher than that high. So immediately I'm looking at this as suspect, and I probably wouldn't take sales during London close now because there's a swing high that violated this high and we're above the open, and then another one without creating a fair value gap after hitting these points. So that swing high would be valid. If it had to create a fair value gap down, I would wait for a return into that fair value gap and then take a sell towards the open. But you can see here, it creates the high, runs the high out, creates another high, then creates a fair value gap. If you have to trade off this fair value gap, you still have the context of you're going towards the open, but I just don't like it because it's already taken out highs multiple times. Even though you're in this fair value gap, it could still be valid, but to me, I wouldn't want to take this. Falls. stop 3 points above the session because we're expecting that to be the high. So it's 9.9 pip stop. There's a theoretical entry again. All these entries are theoretical. We're just looking at price and reactions. And we're looking for levels below. So it's day open. And then the first one is 1.5. So that's the initial take profit. 1.5 right there. 1 to 7.6. Let's extend this out, see if it hits. Pretty close, pretty close. You'd have to wait a few days. Friday in the London session it hits. So you literally have to wait 2 days for the trade to play out, to pan out. Oh gosh, I used the wrong level as well. Hey, Bana, hey. So it's there open, and then this would be the first level. That's 1.5, not the 1. Because that's still the initial range. 1.5. You'd have gotten really close to stopped out. I think you stopped, no, not stopped out. Would have still hit, but it would have taken many days. Many days. Many days. It's close to hitting here. But that's why we're expecting this to be a high that's not going to be touched, and then a bit of wiggle room in case the market wants to go there. Okay. If you guys enjoyed that, there's some stuff you can add to this as well. Average to-do range for the day. That's a good one. Just to know, like, if it hits average to-do range, or average to-do range for the past 5 days or past 6 days. If it hits that, and we're trending from London, you're going, and maybe the market's trending down until London close, and it hits average to the range, and it's hitting a level, and then it creates a fair value gap up. Okay, time to close. It's fine, and don't try to close the exact bottom. Don't try and sell the exact high. Don't try and get out at the exact low. Just try to get somewhere in the middle, and then just eat the bone, eat the meat. You don't need the bone. Eat the meat. That's literally, I'll just show you guys two days using these. This is the only rules you need. The only rules you're using. Literally show you 2 days, a Tuesday and a Wednesday in January. You could have made 6. If you'd close here, let's say you're closing at this, because that's the time. 8. That's 8%, and this is 8.9%. So it's about let's say 9 and 8, 17% in what's that? A week, because you're holding till the straight pans out. 1 week. Actually, you would have been stopped out this one because you lower your stop, but let's just say you get out at 0.5%. Oh no, let's say break even, because so you make 8% in a week. 8% a week. That's insane. That's literally insane. And the worst thing about this is I'm just giving this for free on YouTube. Yeah, should have made a course, eh? Too late now. If you enjoyed this video, leave a thumbs up. Safe.